Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharry. Thanks for tuning in. So when I was a kid, someone super glued a quarter to the cafeteria floor at my junior high school. And we enjoyed several days of entertainment watching people trying to pick that quarter up. A few of the kids were super aggressive in their efforts to unstick the quarter. Now, keep in mind, we're talking about the 1980s, and a quarter went a whole lot further than it does today. Like, I could actually buy something with a quarter. Heck, it might have even been minted before 1965. And if that was the case, it was 90% silver. So if it was so-called junk silver that was glued to the store, it was definitely worth picking up. The melt value of a pre-1965 quarter right now is about $14.60. Would you pick up $14 off the floor? Heck yeah, I would. So, why am I telling you about a junior high prank? Well, I was reminded of this incident by a story I ran across in the news last week. A hotel in Macau tore up its entire lobby floor to make a little money. By the way, the floor was embedded with gold bars, each weighing about 1 kilogram. So, this kind of raises an interesting question. When should I sell my gold? And I'm going to dive into that question, but before I do that, I do want to thank you very much for tuning into the show today. And as always, I very much appreciate it. And as always, I would very much appreciate it if you would do me a favor and go to wherever you're listening to the podcast and write us a little review, hopefully a good review. Give us those 5 stars and also share these episodes around. If you get something out of it, share it on your social media networks, and that will help us to grow the show. I should also probably tell you, and you can probably hear it in my voice, I'm pretty sick. Everybody in my house is sick right now. Good times. So I'm going to try to push my way through this, but I apologize if it sounds raspy and less enthused than normal because I'm just trying to get it done. It also might be a little bit shorter than usual, but I don't know. I felt like I should get an episode out, and so here we are. So right now, you've got people all over the world rushing to coin dealers, jewelry stores, pawn shops, hoping to sell their scrap gold and take advantage of the skyrocketing prices that we've seen over the last couple of years. Especially true in the United States, where by and large, physical gold buying has fallen short of selling. There are more people in the U.S. that seem to be trying to sell gold and silver than buy. Not true in the rest of the world. In fact, last year, the demand for physical precious metals, so we're talking about gold bars and gold coins, was at record levels. But basically everywhere except for the United States. And most of this physical gold buying is being driven in the East. So we're talking about Asia, China, Japan, India. The United States, we're still selling. Now, that did shift a little bit as we got into the latter months of 2025. We did see a pickup in gold buying as people suddenly realized, oh my gosh, gold really is going up and it seems it's going to stay there. But anyway, so that's kind of what's going on, and there is a lot of selling. Right now, I would say the market is more balanced with selling and buying, but there has been quite a bit of selling. So the hotel that I'm talking about in Macau, it opened in 2006, and it was very much known for its opulence. And the entryway had what they called the golden pathway. And they were basically just dozens of gold bars that were embedded in the floor. So they were almost like tiles, and they were down in these tiles, and then they were sealed over with some type of sealant so you could walk on them. And the hotel's parent company recently announced that it removed, quote, a number of the gold bars and sold them to a refiner. And it pocketed $12.8 million on this little project. According to the company report, they liquidated 79 kilograms of gold. So putting 2 and 2 together, they sold about 79 bars of gold that had formerly been embedded in the floor. I've seen a picture of this, and I have to admit it's pretty darn cool when the gold bars were in the floor. And one heck of a safe, right? It's not like anybody's gonna be able to drill them out easily. So in a filing, the company said that while the gold-adorned floor created, quote, a sumptuous and resplendent atmosphere in the hotel, quote, in light of the prevailing market conditions, the leadership of the hotel thought that the spiking gold price presented a, quote, good opportunity to remove the gold bars and sell them. And I should also add that there was a change in the hotel's marketing strategy that also drove this decision to remove the gold bars. Macau, if you don't know, and I didn't until I looked this up, it was a Portuguese colony for about 450 years before control of the region was handed over to China in 1999. So it is now what they call a special administrative region, very similar to Hong Kong. So it has more autonomy than other Chinese provinces, but is still ultimately controlled by Beijing. And interestingly, Macau is the only place in China where casino gambling is legal, but the Chinese government has been increasingly trying to crack down on that, and they're pressuring the area to diversify its economy. So the Grand Emperor actually closed its hotel casino down last fall. The company filing noted that, quote, it is actively planning for the entertainment and amusement facilities, and the lobby was already slated for renovation. Quote, given that the relevant area is planned to undergo renovation and redevelopment, the precious metal that were originally part of the hotel's interior design and outfits are no longer relevant to the theme of the hotel in the future. So, interestingly, in a statement, the Emperor's Entertainment Hotel Limited, that's the parent company, they said that the sale, quote, would strengthen the group's financial position and enable it to invest should suitable investment opportunities arise. And when I read this statement, it kind of grabbed my attention. Let me read it again. The sale of these gold bars would, quote, strengthen the group's financial position and enable it to invest should suitable investment opportunities arise. So, reading between the lines, it seems to me that the hotel didn't sell the gold bars for any specific purpose, right? It's not like they said, we've got this debt we need to pay off, so we're going to sell these gold bars, or we're going to use the gold bar money as part of the funding for the renovations. They didn't say that. They said that they're going to be able to invest it if a suitable investment opportunity arises. Now, if you ask me, the hotel company already had a suitable investment in gold, and they might have been better off of just holding on to the metal rather than swapping it out for rapidly devaluing fiat currency. Now, of course, they didn't consult me before they made this decision, but that's my opinion. And I actually wrote an article about this over at moneymetals.com/news, and a Market Watch reporter contacted me, and she asked me a really good question. She said, well, presumably the gold sale was transacted in Hong Kong dollars. So am I saying that the Hong Kong dollar is devalued, and how so? And I'll be honest, I hadn't thought about this, but the short answer to her question is yes. But I'm going to be completely honest here. I assumed that the transaction was in US dollars, and that's because that's how all of the reporting that I read framed it. Even the Hong Kong and English language Chinese papers that I looked at all quoted the gold price in dollars. And usually if it was in another currency, they would say, they made X amount in Hong Kong dollars, and that translates to however many US dollars. But everywhere I saw the story, it was just quoted in US dollars. So I just assumed that it was in US dollars. I don't know if that was the case or not. It could have been in Hong Kong dollars, or it could have been in yuan. But regardless, I would answer the question the same way, because what I was driving at is that all fiat currency is being inflated and devalued. So in the news, we mostly hear about de-dollarization because the dollar is the reserve currency and it's a big deal. But the fact of the matter is every currency is devaluing and falling relative to gold. Some faster than others, right? You look at some currencies and their price increase of gold is even bigger than what we see in dollars. In other words, it's not so much that gold is getting more expensive. It's that the fiat currencies that gold is priced in are losing value. So it takes more of those currencies to buy the same amount of gold. This is precisely why central banks are increasing their gold reserves. It's the only truly stable currency at this point. And I want to reiterate this. A big part of the reason that we're seeing this big increase in the price of gold is really just the fact that the other currencies that it's priced in are dropping in value. And it's always interesting to kind of look at other items that are priced in gold. And I did an article, it's been about a year and a half ago, about how much gold it takes to buy a fine suit. You go back to like 1900, and one suit cost basically an ounce of gold. And at the time, and this was before the rapid gain we've seen in gold today, but at the time that I did the article, one suit was still basically 1 ounce of gold. So we see that really relative to other things, gold is relatively stable. And it's the other currencies changing around it that are causing these price fluctuations. Now, that's not the only aspect feeding into the gold price. I want to make that clear. There's demand. There's other factors in the economy that are pushing gold. And I do believe that at this point, gold is actually gaining in value. Although one commentator or analyst that I listened to made a really good point. He said that he thinks what's going on right now is gold is just catching up, that it should have gradually worked its way to this price anyway, and that due to other factors in the economy and in the marketplace, the price of gold had been kind of held down below what it should be, so it's kind of caught up to reality. But regardless, the point is, every fiat currency is being devalued. I did another article this week that you can find over at moneymetals.com/news, and I'll link to this one in the show notes page. It was about analysts at CIBC, which is a Canadian bank, and the article was about their price forecast. They just raised their gold price forecast to $6,000 this year. And they actually made this very point about fiat currencies. I want to read this to you. Quote, "With the decades-long de facto safe haven asset, U.S. Treasuries, no longer considered risk-free, investors and central banks are looking for alternatives. The pickings are slim. Most Western economies are facing near-record debt-to-GDP ratios, and most are looking to inflate rather than constrain their way out of the dilemma. Investor confidence in fiat currencies has eroded, and gold has seen much of this flight to safety." So they see it, right? Most Western economies are facing near record debt to GDP ratios. Absolutely true. They're talking about the debt black hole that I've been hammering on for the last several months, and is really my friend Greg Weldon. That's his term, but absolutely right. And most of these countries, they have no intention of constraining their way out of the dilemma. In other words, we're not talking about spending cuts, right? I mean, you might hear some politicians here in the U.S. talk about, oh, yeah, we got to cut spending. They're not cutting spending. Spending's going up. You can look at every Treasury statement going back for months and see that spending is going up and up and up. So the only way that they can deal with this, the only way that they can continue to maintain this big government spending is by borrowing, and that requires inflation. It requires currency creation. That's what they do. So understanding this reality, in my opinion, it is foolish to sell gold for other currencies. Now, I'm going to give you an analogy, and it's probably a little hyperbolic, but imagine selling dollars for Venezuelan bolivars, right? Nobody would do that because you know that the purchasing power of that bolivar is going to drop probably tomorrow. So while we're hearing a lot right now about this de-dollarization and the sell America trade, and this is a thing, the dollar isn't the only fiat currency on shaking ground. In fact, even with dollar devaluation, it's still stronger than a lot of currencies, right? The dollar's always been kind of considered the cleanest dirty shirt in the laundry hamper, right? I mean, they're all dirty, but the dollar was kind of better than the others, so. But all of these currencies are devaluing to varying degrees. Every government is buried in debt. Every government wants to spend more than it has. Inflating the currency is the only way to sustain these levels of global debt. In a universe dominated by a debt black hole, you need real money. You need real money. The government needs fiat currency. You need real money, and that's gold. It's the only currency that governments can't print and devalue. In fact, fiat systems were created precisely because they can create more money out of thin air. That's the whole point. This removes constraints on government spending. And we can look at the history of money in the United States, and we can see that whenever there was need for spending, whether it would be a war or a crisis, the government always responded by printing money. They did it during the Civil War. And then when we got, to Franklin D. Roosevelt, he basically took the United States off the gold standard. Effectively, he didn't exactly. He set us on that path because he needed to spend more. So here's the takeaway, right? The point that I want you to remember. Governments devalue their currency as a matter of policy. Keep in mind, the Federal Reserve has stated 2% is the inflation target. That means the plan is to reduce your purchasing power by 2% every single year. Okay, you might think, 2%, Mike, that doesn't sound so bad. Well, that means every 5 years, you're losing a little more than 10% of your dollar's value. It's more than 10% because that compounds over time. So why in the world would you try to preserve your wealth in something you know will be worth less next year than it is now? Right? Fiat systems, great for governments. Pretty awful for normal people who want to save and preserve their wealth. The only way you can do it is to hold real money, and that's gold. Okay, so now let's be a little bit more nuanced, because I don't want people listening to say, Mike Meharry says you should never sell your gold. That's not what I'm saying at all. I would never tell somebody that you should never sell gold or silver, right? If you need to buy something, it makes sense to liquidate your metal, take your profit, and do what you need or want to do. Right? I have a friend, and he recently sold some of his silver because he needed to make some repairs on his home that he'd been putting off. And that was an opportunity. Silver had gone up so much, he had such a nice profit that he felt comfortable taking some of that profit, putting it into his house. Makes sense. Want to take that European vacation you've always dreamed of? Sure, sell an ounce or two of gold and go for it. Or, even if you want to shift your investment portfolio. Maybe you want to up your risk in the equities market. Assuming you're bullish on equities, you might want to liquidate some of your precious metals and put it in more aggressive investments. Although at this point, I'm not sure you would want to do that given that gold and silver are pretty much outperforming everything. But my point is simply, I'm not arguing that you should never sell your gold or take a profit. And when to do that is up to everybody's own, situation and needs. But I would say it is foolish just to take a profit and then hold on to a bunch of dollars that are going to devalue. So I would kind of sum it up this way. If you plan to buy stuff, selling gold and doing so makes sense, right? Because you're not losing anything. If you liquidate your gold into dollars and then you immediately spend those dollars on stuff, you're coming out fine, right? But if you liquidate your gold and then hold on to those dollars for 2 years before you buy anything, well, you've lost purchasing power. So, Mike, what should this hotel have done with its gold? Well, I can't say that for sure, right? I don't know what their intentions are or their strategy. If they plan to use the money they raised selling that gold on capital expenditures or paying off debt or something like that, it makes sense to me. But to simply sell the gold because, the price has gone up, let's sell it, well, that's just foolish. And if they were planning on pulling the gold out of the floor anyway, they didn't have to sell it, right? They could have just held on to those gold bars, put them in a safe somewhere, converting it to fiat if they're just going to hold on to that fiat. And that seems to be what they're doing, because you remember the quote that I read earlier where they said, if suitable investment should turn up, we'll have this money. Well, it's dumb. You have the suitable investment. You've got gold, right? I don't get it. Exchanging good money for bad. So don't do that, right? Think about what you're doing. And I get it, because we see gold going up, we see silver going up, and we think, oh man, it's got to go back down. And it may. It's going to go down. I mean, we've talked about this before. I talked about it in the show either last week or the week before. When you're looking at a correction, there's going to be corrections. They're healthy and normal in a bull market. You have to continue to look at the fundamentals. And all of the fundamentals tell me that gold and silver are going to continue to move higher. And even a lot of these mainstream big banks are still saying the same thing. They're still seeing $6,000 gold this year because, again, this de-dollarization, central bank gold buying, debt, all of these things that are bubbling around in the economy aren't going away anytime soon. So, don't exchange good money for bad. That's my advice for today. Speaking of bad, did y'all watch the Super Bowl? Was it the greatest game I've ever watched? I know some of you out there just rolled your eyes and you're going, oh, Mike's going to talk about sports ball. I am going to talk about sports ball because I like it. I'm a football fan. And if you're a Seahawks fan, congratulations. I would like to point you toward a pretty cool product that we have at Money Metals. We have silver rounds that are colorized, and we have them for a number of the NFL teams, and we do have these beautiful silver colorized, they're not coins. Coins not the right term. Rounds is the term that I'm looking for. And so, if you want to celebrate your team's victory, it's a good way to do it because, it's made out of silver, so that means it will probably go up in value. And speaking of going up in value, you probably know that the Lombardi Trophy is silver, which is why I'm bringing this up in this show. And I didn't really just plan to talk about football. This is a precious metals podcast, so a silver trophy fits with the theme. And when you consider the value of the trophy, you realize just how much silver has gone up over the last year. So let me give you a few little trivia tidbits about the Lombardi Trophy. Based on the manufacturing costs, the trophy is valued at between $50,000 and $60,000. Although, if you put it in an auction, they're essentially priceless. History and all of that. And of course, there are not very many of them. Tiffany and Company produces the Super Bowl trophy every year, and they make a new one that stays with the team. So the team's not going to sell the trophy. However, players and coaches can order their own replicas, and some of them actually have shown up on auction sites in the past and have gone for a pretty penny. But how much is the real Lombardi Trophy really worth? I mean, just considering the fact that it's made out of silver, right? It has to have some value. Well, as I mentioned, it is silver, but it's not pure silver like a bullion coin. The Lombardi is actually fabricated out of sterling silver, and you've probably heard of sterling silver. A lot of silverware is sterling. And this is simply an alloy of silver. It contains 92.5% by weight silver and 7.5% by weight other metals, usually copper. So it's kind of like those junk silver coins that I talked about earlier in the show. They're not pure silver, but they're close. The junk silver coins are actually a little bit less pure than sterling. They were 90% silver, and the Lombardi is 92.5% by weight silver. So, did a little calculating. The Lombardi Trophy measures 20.75 inches high. It weighs 7 pounds. That's 3,175 grams. So, given the current price of silver, and I calculated this the other day, so the price is actually higher now, but when I ran this calculation, the price was $76.50. We're actually back over $80 now, so take that into consideration. But on game day, it was $76.50. That was $246 per gram. And so that means, if you do a little calculation on the back of the envelope, the silver metal value of the trophy would be around $7,810.50. Not bad, right? Now, what was the melt value last year when the Philadelphia Eagles hoisted the Lombardi? Just over $2,990. So pretty healthy gain, right? The silver in the Lombardi was $2,990 when the Eagles won, and it's now $7,810.50. So that just shows you how much the price of silver has gone up just in 1 year. Again, a very, very healthy gain. And, for reasons I've discussed on the show, I think the silver and gold bull markets have plenty of legs left. And I'm not going to delve into that because my voice is about done. But if you're thinking about getting silver, now might be a good time with the price around $80. Remember, we saw silver spike up to $120. So we're we're $40 under the all-time high. So there's plenty of ground to gain. And, a lot of analysts that I've talked to, I think $100 silver this year, even in the relatively near future, is very possible. And on top of that, we have what I would consider silver on sale because we've had this correction. And then Money Metals actually has silver below spot. Certain products you can actually get below spot. So a great deal. It's a great time to buy. We have plenty of inventory at Money Metals. I know some retailers have had difficulty sourcing silver. We're not having any problems, so we have plenty of inventory. Now, I will warn you, there may be some delays in shipment and processing because it's just so busy right now. But we'll get that stuff out to you as fast as possible. So take advantage of these dips. Buy the dips. If you believe that the gold bull market and the silver bull market are going to be ongoing, then you want to buy the dips if you have the opportunity. And now is one of those opportunities. So you can go to moneymetals.com and just click on specials, and you'll find those silver products that are below spot. Of course, we have plenty of other things. We have gold, we have bars, coins, rounds, we have specialty items. And you can check all of that out on the website, moneymetals.com. If you have questions, give us a call, 800-800-1865. You can talk to a precious metal specialist. Folks are fantastic. They can answer your questions. They love talking about gold and silver. They love helping people figure out how they can include gold and silver in their investment portfolio, how they can preserve their wealth. So they'll be glad to talk to you. I will say this, if you know what you want, just go ahead and order online. We'll get it shipped out to you. There could be some wait times on the phones, but if you want to talk to somebody, absolutely don't hesitate to do it. And if you'd like to talk online, you don't feel like being on the phone, you can go to moneymetals.com and speak with the precious metal specialist right there in the chat. So that's it. I'm done. I can't tell you how many times I've had to stop this to cough. Thankfully, we have great editing capacity here at Meharry Studios. So we're going to wrap this up. And we're going to call it a wrap for this episode of the Money Metals Midweek Memo. You can get more information on everything that I've talked about on the show today and a lot more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, make sure you sign up and get on our email list. Of course, you can subscribe to the Midweek Memo on your favorite podcasting platform, and make sure you tune in to our Market Wrap podcast every Friday, where you're going to get a quick overview of the week in precious metals, along with conversations between yours truly and other interesting people from the world of gold and silver, economics, and investing. Thank you for listening to the show. Have a fantastic rest of your week. I'm going to go get a nice cup of hot tea, and next week I'll be better, and I'll talk to you then.